you've said is a major mistake for small business owners is mixing personal and business money. Why is that such a problem?
When you set up the business, it's always ideal to set up a bank account.
Business owner wants real clarity in their finances. What's the very first step they should take?
Okay, so if they want clarity, the first step is to set up.
Welcome to Season 10 of Digital Transformation Academy, the show where we break down practical business processes and automation strategies you can actually use. Remember that smart actions lead to better business. Because business shouldn't just look good, it should feel good. The Digital Transformation Academy podcast is brought to you by Dennis Hilario's Digital Courses, your step-by-step guides to mastering accounting, HR, inventory, marketing, productivity, and more. Just go to dennismhilario.com for details. Mentora PH, the platform that connects you with experienced business mentors who've been where you want to go. Just visit theplaygroundph.co/coaching. Links are in the description.
Welcome to the newest season of the Digital Transformation Academy podcast. So we are now in season 10. So this season is going to be a new format. So this time it's going to be conversations with me and my newest co-host, Leslie. So she's going to be asking questions, the right questions, and then I'm going to be answering it. Again, if you're new here, kindly consider subscribing and smash the like button. So it's going to be a very exciting season and future episodes all about business process and digital transformation. Probably without further ado, let's dive right into the questions. Right.
So Dennis, in this season, we'd like to break down the practical mistakes and wins small business owners face. One of the things you've been vocal about is how owners handle their money. Let's start there.
Sure.
So, separating business and personal money. You've said is a major mistake for small business owners is mixing personal and business money. Why is that such a problem?
Yeah, that's a very good first question. When you set up the business, it's always ideal to set up a bank account. It's actually not ideal, but it's mandatory to set up, a new bank account that is registered under the company's name, whether it's a sole proprietor or a corporation. Though a sole proprietor is acceptable to name the bank account under the owner, right? But in any case, it has to be separate from your personal account, because number one is we don't want to mix the data when it comes to your profit and loss and expenses, basically profit and expenses of your personal income and the business income. Because if it's mixed, then the data is distorted if, really the business is gaining profits or losing money, right? So that's the first most important reason for separating bank accounts in business. Second is control. Of course, eventually as you grow, you don't want people to see your personal financials, right? Personal is personal and business is purely business.
So, if a business owner wants real clarity in their finances, what's the very first step they should take?
Okay, so if they want clarity, the first step is to set up their ledgers. It's called chart of accounts. I think as discussed before, there are like standard chart of accounts in a business, like assets, liabilities, profit, expenses, cost of sales, and what have you. So you have to set each one of them as ledgers, so you would know where your money is flowing, is coming in and going out. So that's where you can get clarity. And in accounting, I always say that accounting is an art of recording. So you just need to somehow understand that art of recording, and it starts with the ledgers.
Now, once the bank account is separate, how should they manage it day to day? For example, how do you recommend setting up the general ledger and recording inflows?
As I mentioned, once you set up the bank account, you have to set up a ledger for that. A ledger is like the increase and decrease of the balance of your bank account, and then the running balance, right? So, based on your question, so the way to do it is every time you receive money, that's an inflow. So it can come from a trade transaction, which is sales, or collections from receivables, or it can come from deposits from your personal investments, or transfers from another bank account, or from cash on hand. So those are the major nature of cash inflows. It's important, as per BIR, every cash receipts or inflow should be recorded in your book of accounts, which is the cash receipts journal. So you just record it there in your books if it's manual, and ideally you should also have a digitized copy. But every time you receive an inflow, you should issue a collection receipt or a cash receipt. It's actually after your sales invoice or service invoice. We can talk about sales invoice later, but we're talking about cash now, right? So that's the ideal thing. So a cash receipts book is similar to cash receipts journal. So you have to have a journal entry on every inflow of money. And again, if there's an inflow, there's an increase in bank account balance, and then you update the running balance.
So let's talk about outflows. How should owners handle disbursements and make sure every payment is properly documented?
Yeah, similarly, the common practice in disbursement is there's an accounts payable voucher or an invoice from supplier, and then you pay it through checks or transfers or bank transfers, right? It's important to have a payment voucher, or sometimes it's called check voucher or cash voucher, every time you pay somebody, a supplier or an employee, and what have you. It's important to do that so you can record the nature of that particular transaction. Once you have secure a signed copy of that from the payee, then you record it in your cash disbursement journal. It's actually another ledger or books mandated by the BIR. So if you do it manually, you write it manually. That's where you record the nature of the expense that was paid or accounts payable, and then the corresponding tax or VAT, input VAT portion. It's also important to have a digital copy of that. So it can be a spreadsheet or an accounting software. Of course, ideally, accounting software. And then from there, you also update your bank ledger or bank account ledger, as I mentioned earlier. It's now a decrease in your balance and updates or deducts from your running balance. That's how you do it. But when it comes to management of your payment, there's a lot of approaches. One approach is by paying invoices from suppliers that is due for the week, or it can be based on your cash position or cash forecast. That's what triggers the preparation of the payment, and of course approval from the signatory or the owner.
You've also mentioned a weekly cycle for payables.
Yes.
Can you walk us through what that looks like the cash position, forecasting report, check preparation and approvals?
Actually, it starts with, like you said, the cash position. The cash position is actually a overview of the inflows and the outflows for the week, or historically, week by week. For example, you can do it the past 3 months, you can do it past 4 weeks. So it shows the total inflow and outflow for the period and the balance. Then from there, based on the due date of your invoices to your customers and invoices from your suppliers, you can now project how much is going to come in your cash and how much is going to go out. And you can project if you have a cash surplus next week or next month, or cash deficit next week or next month. So it's important to do that. To have that analysis so that you know when to pay a particular supplier. Of course, and there are like fixed costs that you should take care of, and there are payments that you can hold on to, especially if it's not really an obligation, but say an attempt to grow your business or expand through, say, marketing campaigns and what have you. So usually, every time you receive an invoice from the supplier, they record it together with the due date, and then if you have an accounting staff, they secure approval from the cash position to you as the business owner. And then as an owner, you review the cash position and the cash forecast. And again, cash forecast can also be based on history, historical cash inflow and outflow, not only the due transactions, right? Common practice is every Friday, you release the payment based on the approved disbursements. So that's how it is normally done.
So how about bank reconciliation and audit? So how often a small business actually reconcile their bank statements with their books?
Yeah. Common practice or in theory is about monthly. Because before, you can ask for a monthly bank statement from the bank. But now, because of the online banking, you can do it daily or you can do it weekly. It depends on how critical your cash flow is. If it's critical, then it's ideal to do it daily so you don't get to have a bounce check. But the practical recommendation is weekly. So if you do it weekly, then you make sure na you will not miss payments. You can fund whatever is needed to be funded for that particular week. So now the bank recon is technically matching between your record and the bank statement of the bank. And there are instances that there are differences from the bank's statement or online statement and your record. Because, for example, if you issue a check, at times the supplier doesn't encash it right away or does not deposit it. So in your record, it's already deducted, but in the bank, it's not yet deducted. Or you missed recording something in your ledger, but it's already reflected in the bank statement. So that's where bank reconciliation happens, where you see deposits in transits and outstanding checks, the checks that are not yet reflected in the bank, but reflected in your record. So, and at the same time, it also gives you confidence that what's going on with your cash is actually controlled, right? And it serves as an audit report where whatever is released or cleared in the bank is actually identified or approved by the management. So it's really important to do an audit, again, depending on your confidence level, if it's weekly or monthly, so that you know that there are no fraud transactions that is happening within the organization or externally with your suppliers.
Finally, how does an accounting system help automate all of these steps and reduce the stress come audit time?
Yes. Good thing about the accounting software is that, number one, you don't have to write vouchers and receipts manually because you can have it printed directly. Once you encode the data, say the check preparation, the check voucher that I mentioned, it can be printed directly from the accounting software. Second is, you don't need to manually update the ledgers, especially the bank account, increase, decrease, because once you encoded it, say if you have an approval, then it automatically updates your general ledger. In effect, will update your financial statements, balance sheet, profit and loss, cash flow. And the cash position that I'm talking about earlier, you don't have to prepare it manually because it's automated, including the forecast. At the same time, you can also establish control, especially if the software has a feature of approval workflows, meaning your staff cannot proceed with the disbursement if there's no approval on your end. So these things are the major benefit of having accounting software, so that transaction processing is efficient and then you have a real-time financial information. So because if you don't have this, most of the time you get the report after 2 months or 3 months, then the information is already delayed.
So this is about petty cash and revolving fund. Small funds like petty cash can create big problems if mismanaged. Why do these small amounts matter so much?
If small amounts accumulate, then it also has a big impact, right? So if it's not controlled, then there's also an impact in your financials, right?
Okay, so for those listeners who might not be familiar, what exactly is petty cash and when should a business use it?
Right. Yeah, mostly businesses keep a certain balance in your petty cash. So, well, from the term itself, petty, it means small transactions. Like, for example, if you have an office and say you provide free, filtered water, so it doesn't have to go through the disbursement process, the check preparation process, because it's only petty transaction. Say an urgent replenishment of your office supplies or coffee and what have you, small meals, etc. So those are petty transactions. Usually, companies keep like 5 to 10,000 peso petty cash replenished every week or every 2 weeks. It depends on the consumption of petty cash.
So how should the petty cash system actually work?
Okay, so again, you set the threshold based on your policy, say 5,000 or say 10,000 pesos. Now, ideally, if their employee is requesting for petty cash so that they can pay something like, again, water, fuel, whatever, what have you, they request, so they write a petty cash request form, petty cash voucher form. I mean, somebody in the office should be the custodian of the petty cash, the one accountable there. So the employee requests for that, then the custodian approves it. Okay. Ideally, the custodian has a ledger also of the petty cash. Say somebody requests for 500 pesos to buy, say, load or water. Now, the employee executes the transaction and the employee comes back together with the receipt. Now, the custodian file the receipt, and then usually, if, say, the balance of the petty cash is less than 30%, then that triggers the replenishment. So, the common practice is that the custodian should prepare a listing of the receipts and transactions made for that particular batch and the expenses. Say, the total expenses incurred for the week is, say, 8,000 pesos, right? It should be supported by actual receipts from the employees. I mean, the custodian will request a replenishment or payment requests of that particular set of transactions, 8,000 pesos. Now, accounting will process it similar to the process that I mentioned earlier, the usual process, and then accounting will issue a check under the name of the custodian, so the custodian can encash it, right, or withdraw it. So once withdrawn, then it goes back to 10,000 pesos, right? So because again 10,000 expense incurred is 8,000, then the company replenish it another 8,000 plus 8,000, so it goes back to 10,000. Of course, there should also be an audit every month or an announced audit if the balance of the petty cash voucher is equal to what's actually on hand. No. So the internal audit team or the owner can go on an unannounced visit, which is should be stated in their policies so that there's also control.
And then what about revolving funds?
Okay.
How are they different from petty cash? And when should the business set one up?
Right. Revolving fund, mostly this is operations related. That, because sometimes some supplier want everything in cash, or say if you're a restaurant, you can buy in groceries if there are urgent transactions related to operations. So the threshold or the balance threshold of a revolving fund is mostly higher or greater than the petty cash, right? So some companies maintain 20,000, 50,000, or can be 100,000 revolving fund, which is, again, there should be a custodian of the revolving fund. But the process is the same. are practically the same. It's just that revolving fund is more appropriate for operations department, but the petty cash is more in the admin and housekeeping department.
So if someone wants ready-to-use templates for these requests, vouchers, and liquidation reports, plus tutorials on recording them, where can they find that?
Yes, check out my Accounting Starter digital course that talks about in more detail the processes in accounting and these things that we have discussed, especially the journal entries. So feel free to check it out in the link below.
Okay. Thanks for tuning in to Season 10 of Digital Transformation Academy podcast, where we break down practical business processes and automation strategies you can actually use. If you found today's episode helpful, subscribe, share it with a fellow entrepreneur, and check DTA digital courses and Mentora PH to get the step-by-step guidance and mentorship you need to build a smarter, smoother business. Link in the description. My name is Leslie. See you next time.
Yeah.